Hello there, the dollar continues to rally, but what does that mean for traders? Well, I've been speaking to Miles Eakers from Savi Trading. Yes, we're still seeing the dollar push up. Is that giving you a lot of profit opportunities?
Yeah, definitely. We are a bit vigilant at the moment. We're coming to some key technical level on the DXY, not seen since last July. So we are a little bit worried that maybe we are running out of steam. Coming up to the end of the week as well, and obviously there's sometimes you see some profit taking. There are some comments apparently coming out tomorrow from Abe, which could send dollar yen again through 103. At the moment, again, dollar yen's now stalling. We're seeing a bit of a correction, seeing a euro dollar actually form a bit of a base this morning. Some poor US data this morning.
Yeah, I know everyone's looking for the downside for the yen, but isn't there? Especially when we look at dollar yen, if the dollar continues on this run, if sentiment stays strong, isn't there an argument to say that maybe over the summer we could see dollar yen fall back below 100?
Yeah, potentially. I think tomorrow's comments will be the first catalyst to keep an eye on. But at the end of the day, if we look at the US data, it's still not massively strong. It's still better, and I think people are trying to front run sort of the movement out of Japanese government bonds into US markets as such. And obviously you see the Nikkei setting record highs, S&P continue. But there is the old adage like sell in May and go away. So we are vigilant that maybe there is a correction, but we're not trying to call a top at the moment. We're waiting for a technical pattern to see that top form.
Yeah, so what about, I know you follow the S&P as well. Do you think there is any correlation between how the S&P is going to perform and the US dollar? If we do start to see a correction, a sell-off in the S&P, will the dollar sell off as well?
Well, we had an interesting conversation about this, and at the moment there's a lot of money in US treasuries. Where will that money go when it comes out? Will the S&P continue to push higher? Or will the market be shocked by the idea of the Fed starting to tighten and we see a correction lower? I think if you look at an S&P chart, a Nikkei chart, or a dollar yen chart, you see this parabolic movement. And if you look back at Apple and gold, when you get that parabolic movement, you often get a sharp correction lower, which signals the end of that trend. So I personally would wait for that correction before trying to call a top. Yeah,
there's been talk about this death cross for US treasuries, that yield's going to fall below 1%. What implications would that have for the US dollar?
I think it's interesting. I think obviously there's a general shift from government bonds in Japan out to Europe. You see, like obviously the European peripheral is doing very well, but we're actually seeing a push higher in Italian debt, which is obviously a worry. In terms of the dollar, I think at the moment the dollar seems well bid. I think even if 10 years do push lower, then I still think we see a rise in the dollar.
Yeah, so in terms of the yen, are you still looking at the crosses as good profit opportunities?
I think so. I think Aussie at the moment is either lagging or leading in some sort of way, in that Aussie dollar's come under a lot of pressure, and we're eyeing this 96 area. We saw a 99 area as a first potential area for longs, but didn't prove too profitable. We're now seeing a extension of the breakout from the range around the 96 area. So that could be interesting. I think Aussie is going to underperform as commodities continue to push lower. But all of this move and this risk sentiment is on the back of US growth. If that starts to deteriorate, you could see a very sharp correction in the markets.
Yeah, and what about the euro dollar? It does seem to occasionally drop below this 130 level, but generally it still seems relatively set around 130, 132, would you say?
Yeah, it seems fairly buoyant around there. I think most of the market is focusing on the US and the yen as such. So I think euro is in a tight sort of range. I think at the moment, like Italian debt, as we mentioned, is starting to push up again, and that may be worth keeping an eye on. You could see some sort of like Merkel elections coming up as well. There's a lot of things to keep an eye on. I think euros, at the moment there's a bit of calm. It could be just before the storm.
Yes, so just to finish off, across all the currency pairs which you look at, which pair is offering you the most profit opportunity?
Well, we said when we were talking earlier about long euro yen from 125, first target 132, we've reached there. We are looking for a correction to add into the position. At the moment I do feel the yen crosses are at too high in order to enter into long positions. From a fundamental perspective, we're looking at potentially bad US data to give us an opportunity to go counter trend and long the yen basically.
Well, it's always great to catch up with Miles. Stay tuned to Dukascopy TV for more interviews, but for now, goodbye.